Eric Muad with Muad.com. Let's take a look at how world markets closed for Friday. We can see that in Asia, we had markets pretty much to the downside. Not by much, but 1% on average. And we see that Europe also closed down on Friday. And I would say also about close to 1%, something in that range. So we had about 1% on the major averages. Take a look at how the Americas are trading as we go into the last hour and a half of trading in the US, and we see here Brazil down 2%, Mexico down 1.34. Right now we are looking at US markets with about an hour and a half to go, with the markets trading pretty much at the lows of the day. So why don't we go take a look at the charts? And let's begin by taking a look at the Canadian market, which is down about 0.77% before the close here. And we see that now we are seeing some confirmation of resistance here around the intersection of the 50-day moving average going below the 200-day moving average. Generally tends to be a bearish signal. But the key here is that the markets were unable to move above the moving averages over the last couple, let's go into late last week. Now we see that the markets are on a day-to-day basis making fresh lows for multi-month lows, but the RSI on the daily is not as bearish yet. So this improving RSI line could actually help the market stabilize here in the coming days or so. Now, of course, unless the market decides to break this line of support that it is showing here on the daily RSI, if it breaks, expect lower prices. If it holds, one can expect some type of a short-term reversal, but I don't think it's going to be a strong one just because of the way markets are positioning themselves. We can see that this line here on the daily RSI, as we discussed last week, has become a problem. Resistance on the line there was short-term highs there. Resistance on the line, which happens to be around the 50 level, was the highs there, and resistance here was the highs there. And also there's a line connecting a backtest line here. So this has also been confirmed resistance. So lots of things that we were looking at after last weekend's video, and the indication there was that more than likely markets were pointing down. We get that move lower this week. Take a look at the weekly, and on the weekly we can see that now we are breaking this multi-year trend line going back to 2013. So this weekly trend line has been broken. That's never a good sign. And also we see that we have a bearish crossover between the 13-week moving average and the 34-week moving average. So that's not good. So that this crossover tends to indicate a change in sentiment, which over time could suggest lower prices. So that's the risk. Remember, we had a bullish crossover here between the 13-week moving average and the 34-week moving average, and the market had a chance of moving higher. So that's the risk here, that the markets could actually be looking to go down. Also, if we take a look at the weekly RSI, this line needs to hold because this is where it's been bouncing successfully. So if it can hold this line in the coming week or so, remember this is where markets have been finding nice lows. So let's get rid of all that stuff. So that line is where markets have been finding support over the last 2 years or so. You can see support on the line, uniform activity support on the line again, and now we are here. If markets can hold above that line, then that's going to be all the market needs to start recovering. Otherwise, this becomes a risk trade, because the more we trade below this line, which has been support, so the more we trade below that line, the more we are entering into a bearish phase, and that's the risk. We take a look at the monthly, and on the monthly we see that also the monthly looks like it could very easily be testing this long-term monthly RSI lows line. If that line can hold, then the market can bounce. Otherwise, if it trades below that support line, we are entering into a bearish market here. So that's the risk. On the price, this recent monthly closing low of 14,632 needs to hold. Otherwise, trading below 14,632 would suggest that this market has broken below the recent monthly lows. So trading below that is bearish. Trading below this line is bearish. If it can bounce on the RSI, So show a bounce on that line, that's going to be bullish. If it shows support above the 2015 monthly closing lows, then that could be support. So either it holds or it breaks, and we are in that particular situation where this could actually deteriorate if the market does not find stability around here. If we take a look at some European markets, take a look at the FTSE. As we were discussing last weekend, it had come back to test this declining 50-day moving average that has become resistance, and more importantly, we had drawn a line connecting recent daily RSI highs. We were expecting resistance here, we got that resistance, and also this line connecting recent resistance levels. So there were two lines, and the second line here was the one that was coming into contact at the conclusion of last week, and so we were expecting this could also be an area where the market pulls back. So I think now, after the pullback of the highs here recently, this is now probably sideways in my opinion, unless the market can come and test this line connecting the lows and hold, or if it can hold the other line which it has been bouncing. So right now I think we can say that this looks more like a market that has given us a short-term sell signal. We should expect lower prices. We take a look at the French market daily, if I can find it, that is. So the French market daily, and we also see that it came back to test the RSI level where it has been stalling, which is this level here. And this level is critical because we broke down, so this break on that level is where the market came off the high, so it killed that run, and now we've been coming back here. We came here close to this and showed resistance, which is the high there. We did come slightly close to the line there and stalled, which is this level, and you can see here with Friday's down day that confirmed by this resistance on this line. So in my opinion, right now seems to be indicating more than likely that the market is positioned to be pulling back even further day to day, or in the coming week, or at least in the first part of the week. If we take a look at the German market daily, we see that on the daily for the German market, it too had come to a level of potential resistance given the fact that this was the break level. So that break point right here corresponds with the move off the highs, which killed this nice run. So this nice run came to an end during this price move here, which corresponds with this RSI break, and so we can draw a line from there that gives us information as to when it stalls. And you can see we came back and tested that break line and failed. So short term, I think the indication continues to be that the markets might be looking to pull back. If we take a look at the Russian market, we were talking about potential for resistance because of it finding resistance around a declining 200-day moving average, and also we have a declining 50-day moving average. So generally things are pointing down. We discussed the idea that the RSI had broken down here around the 50. So this break right there corresponds with this movement in the RSI and a break, and also off the recent highs for 2015. And we can draw a line which happens to be around the 50 level. And you see here again, we got double top resistance here, and recently another double top on the daily RSI, indicating that more than likely this looks to be pointing down. So the risk here, and it's just a risk, that this could actually continue to see lower prices. If we take a look at China, we can see that with a slight move on Friday, so slight move on Friday suggesting that this line is still being back tested. So there's a line connecting recent RSI lows, this line here, and we've been talking about this line could be back tested. So let me draw that again, so I'll show you what I'm talking about here. So it's this line here that is being back tested on the daily RSI. Once we broke below that line there, which happens to be this move, since then the market has been unable to stay above that blue line. So that might suggest that this is where, especially with Friday's move confirming some type of resistance here around the 50, the indication is that more than likely this market on a day-to-day basis could be looking to at least come back and test this 200-day moving average. So day to day looks like the Chinese market is also on a pullback mode. So that was one line of resistance, and of course the other line of resistance comes from the previous area where it has been and was bouncing high. So let me draw that line here. So this green line is where it was bouncing during this nice strong phase. So when the market was moving higher here from late 2014 to about June of 2015, very nice strong run, and it was bouncing during that period on this green line. It bounced here during these lows. It again bounced here with a double bottom support during these lows. It bounced here beginning of May, which was these lows here. Since then, the market has turned down. It broke below that level, that green line, which was this level here, and now showing resistance on the green line. So I think what was support during this nice bullish run has now turned into resistance here and here, suggesting that over time, day to day, this market might be looking to point down. We take a look at the weekly for China, and we see that, as I discussed last weekend, it needs to hold two levels. It needs to hold this line of support here. It also needs to hold this line, which happens to be around the 50 level on the weekly RSI. Now, as long as it is trading and bouncing nicely at the 50 level, this is a market that could actually on a week-to-week basis be moving higher. Now, we have to also qualify that by saying if we break below those two lines and if we move below the RSI level of 50, then the market might pull back. For now, given the way it traded for this past week, it seems to be respecting the line connecting the lows, which is bullish short term on a weekly basis, and it is also trading above 50. As long as those two things are taking place, one should give the market here the benefit of the doubt. Also, keep in mind we should give the market the benefit of the doubt for a rebound as long as it is trading above 69.1 on its monthly chart. So if the monthly is trading above 69.1, that's a good market that could recover. Otherwise, if it cracks below 69.1 on the monthly, it could begin the move lower. The last time we failed to hold above 69.1 was during this period, late 2007, and of course we know what happened in 2008. So right now the RSI is trading above 69.1, which is strong. So the weeklies and the monthlies look good. The daily is a little bit suspect. If we take a look at Japan, and you can see that the Nikkei has come back to this level where it has been stalling on the daily RSI. You can see the last time there was a stall on that level was here and a slight pullback, and then the high came during this uniform activity period above the red line and back above it, which gave us the high, and now we seem to be showing resistance here. So I think on a day-to-day basis, this market also needs to prove itself and could also be setting to go lower short term. Take a look at the weekly RSI. You can see that the level to watch is 20,706. If it can hold above 20,706, then the market should be looking to go higher. Otherwise, if it fails to hold above that threshold, then the indication is that this market is looking to go down. So the level to watch pretty much is 2,706, which is the recent weekly closing high. Anything below that is bearish. Above that, then it is bullish. If we take a look at the Australian market, and we can see that the level we were talking about, that line there on the daily RSI, has been where it has been stalling ever since we got a break. And so let me draw that line, ever since the break somewhere there. So this break corresponds with this period, which brought the market off the highs here. And since then, you can see without fail that markets have been moving to this level here with uniform activity resistance on the red line, giving us short-term highs. Double top uniform activity to the red line, giving us a top right there. And again, resistance on the red line with uniform activity gave us a short-term top. And we can see over this past week, we went above the red line and back below it with uniform activity, which was good for another resistance level and the market pulling back. So right now I think we are still stuck on this pullback mode on the daily for the Australian market. One should expect it to at least struggle around here or be sideways. If we take a look at the monthly for the Australian market, we can see what's going on. It's a very simple line connecting these lows here on the monthly RSI and also here. So as long as it is holding on this line, then it has a chance of recovering. Otherwise, if it finally fails to hold above this monthly support line, if it breaks that line, then expect the market to go into a severe bear market. All right, let's take a look here at the Nifty, and we see that the Indian market, in my opinion, also seems to be struggling a little bit. It's hard to tell, but you can make the argument that it is actually showing nice action because it finally managed to move above the 10-week moving average. All right, 10-week moving average. So it's above that, which is good. But I think if you look at it from another view, which is the one I prefer, is we see that there was a break on the RSI somewhere around there. And if you draw a line from there, so something like this, you can see now that there's some level of resistance that has been seen here with uniform activity, which was this high. And now here in the past week, we seem to be struggling to hold above that red line. I think, in my opinion, given the fact that the RSI here is trading at 53, there's a high likelihood that it could also turn around and move below 50. If it moves below 50, expect a big down week, because you can see every time it moves below 50, like here, we have a big down week, moved below 50 again during this period, you had a big down week. So that's what happens on down weeks. And conversely, when you have a move above 50 on the weekly, you get to have a big up week. So you can see a big up week during this period, which is here, big up week here, which is this period there, and also recently nice up week as we moved above 50. So depending on whether it can hold above the line of resistance, so the thing to consider here is if it holds above this line of resistance, that's good if it can hold. Otherwise, this might become a problem. If it cracks below RSI 50 on the weekly, expect a pullback. If you take a look at the daily, you can see why I say that, because we've come back. Once we made these highs here, you can see that the RSI broke down somewhere there. And so that break of the RSI gives us a line right there. And you can see the market has used the same line before for a short-term high, which is here. And we've come above and traded above the line with uniform activity over the last 2 weeks there. So I think, in my opinion, I would suggest that this probably suggests the market wants to pull back. Otherwise, for this to be a different type of situation where the market doesn't come down slightly, the market needs to move above that red line. Right now, I think it's pointing to a market that wants to pull back. Now, let's take a look at the South African market by taking a look at the monthly. Let's begin with the monthly here. You can see it had a big down week this past week, just like the US markets, down about 2.6%. Why? Because the weekly RSI finally did move below 50 again. So this move below 50 this past week was the reason why technically the market was down a little bit substantially. So the key here is what happens around the 50. So if I draw a line like that on the 50 level, you see uniform activity bounce back above 50 for support here. Uniform activity bounce back above the 50 for nice support there. And also this was a dome or some type of a U-type formation here for a nice re-entry back in the market. So what I'm saying here is if it holds back above 50, then that's good. If it cracks and stays below 50, that will indicate that this is actually poised to trade lower. For a couple of weeks now, I've been stating that the South African market looks very risky. I think the risk here is that this goes into a severe bear market. Why do I say that? Because we are looking at the threat of moving the monthly RSI to 3-year lows. If it cracks below to 3-year lows on the monthly RSI, that's a major sell signal. And you can see that if that is confirmed with the MACDs also pushing to 3-year lows. So if one of the MACDs moves to 3-year lows at the same time, which is what it's about to do, if this moves to 3-year lows and the RSI also moves to 3-year lows, I would expect that the South African market is going to go into a major bear market correction. Keep in mind, this market has been moving very well over the last couple of years, as you can see. So maybe the next phase of this market is to trade lower, and the key here is if it can stay above RSI, or if the RSI can hold this line. If it breaks like it's doing, expect there to be a major correction. If you take a look at let's take a look at the SPX in conclusion, S&P 500, and you see a couple of things here. Resistance on this line connecting recent RSI highs came into play this week. Right now we are seeing the market showing more than a 2% drop this week. Why? Because the S&P 500 is threatening to close below 50. So depending on whether it stays below 50, expect a big close or at least a confirmation of a down week. And just like the other markets, the next trend for the market is going to be dependent on how it behaves around the 50 level. If it can bounce back above 50, just like it did here, then the market could recover. Otherwise, the risk, and it's always a risk, that if the market cannot hold back above 50 and stays in this area below 50, expect there to be an even deeper correction. Take a look at the daily for the SPX, and we can see here trading at the lows of the day with about an hour to go before the close. So right now you can see with an hour to go before the close, markets close to day lows, which makes a lot of sense. And the reason why it makes a lot of sense is because for today, Friday, the S&P is moving below 50. Remember, it ended Friday with the RSI at 50.46, and the risk for today was that if it cracks below 50, expect a big down day, which is what we are getting here with a 1% pullback. And keep in mind, those of us who were expecting a pullback all week, why? Are now being rewarded, because we had seen that the market had come back and was stalling to hold above the red line of resistance. And this line here had been resistance during the highs here and was also resistance during the highs here. So all week we've been expecting a pullback, and finally Friday is where we get that nice move on the S&P. The Dow has been down all week. So just like other markets, the indication as of last week was that the market was looking like on the daily to stall. The weeklies look good. So now we are going to end the week with the S&P. The coming week, if it can bounce back above 50, we might get a recovery week. Otherwise, if it stays below 50, expect your markets to be looking to be on a bear market phase. So I think we are now in a pullback mode. How much of a pullback depends on how the weekly charts behave, and also how the hourly charts respond. Check out my US market analysis, weekend analysis video. So I should have another video sometime on Saturday discussing US markets for a follow-up on this video. Eric Muadh with Muadh.com. As always, good luck, peace and blessings. I am out. Enjoy your weekend. I shall talk to you guys next time during next weekend's market analysis video. Eric Muadh with Muadh.com. As always, good luck, peace and blessings. E-A-C-S, and so it is. Yeah. Chicka-ching. Woo.